This is just going to review the introduction to payroll liabilities, and this is from an accounting, financial accounting aspect. This will not review the details from a payroll accounting course with all the forms and reporting requirements. So what are payroll liabilities? Well, hiring employees costs money beyond salaries and wage expense. You have federal payroll taxes, state and local payroll taxes, many IRS reporting requirements, and other federal and state reports that must be submitted. Those are studied in an actual payroll accounting class. Now, what is FICA? Well, it's the Federal Insurance Contributions Act of 1935, which was later revised in 1939. FICA Act provides taxing authority for Social Security and Medicare. And the actual revision, why did it have to be changed 4 years later? There was a lot of opposition to this. It was in the middle of the Great Depression, and there were many who were claiming it was unconstitutional. So they had to rewrite. Congress had to go back and make some revisions to what it is today. And the current rates, as of the recording in 2015, this recording, Social Security total is 12.4% of your income. Medicare is 2.9% of your income for total FICA taxes of 15.3%. Now, you do not have to pay half if you are employed by someone else. The employee pays half. That's what you see withheld from your paychecks. But the employer also pays half. And this is at the bottom is a link where you can find much more current information. So you've just typed this into your browser. But currently, the Social Security wage ceiling in 2015, it is $118,500. 2014, it was $117,000. And as you can see, it goes up every year. Back in the early 90s, it was in the 60s. And what does this mean? Well, this means if you make more than this in any calendar year, you stop contributing. So it's 6.2% for Social Security, that wage ceiling. The first $118,500, that percentage will be withheld from your paycheck, and your employer must match it. But once you go even a dollar above this, you no longer have to contribute to Social Security for that year. That is known as a wage ceiling. That does not apply to Medicare. Medicare has no wage ceiling. And there are actually some new additional taxes that high-income earners are seeing. It's called a net investment tax for supporting Medicare, and that is part of the new Affordable Care Act. Now, what if you're self-employed? Well, there is no ER. Think of EE as the employee, ER is the employer. If you work for yourself, you don't have someone to match it. So that's a problem. That means you have to pay the total. However, you get to take an adjustment to income for half of that. And that is referred to as self-employment tax, only is it really a tax? You could call it a tax. They're taxing you. They're taking money from you. This is included in your final annual IRS tax reporting, but keep in mind it is Social Security. Now there are other taxes, unemployment tax. The current 2015 rate is 6% for federal unemployment, the 2014 rate. The state unemployment percentage, that's going to vary by states. But the nice thing about this, you're allowed to reduce your FUTA payment, the federal unemployment tax, up to 5.4% if you're contributing to both, and that will vary by state. So there are other unemployment taxes specifically that the employer pays, that the employee does not pay in most states. Federal unemployment fees monitor state programs on a federal level, but the actual benefits are paid out of the state programs. And there are many reporting requirements. They vary depending on the size of the company, the number of the company, and that is on a Form 940. It can be submitted quarterly or annually. It depends, and you will learn that in a full payroll accounting class. So looking at a side-by-side comparison, the employee side, the employer side, 6.2 Social Security for both sides. The employer must match this. FICA, same thing, 1.45 on both sides. The employer must match it. FIT stands for Federal Income Tax Withholding, State Income Tax Withholding. You might have other voluntary deductions. On the employer side, the employer has to pay the unemployment tax and workers' compensation. They should take out an insurance policy, and it's how much you're going to pay is going to vary by your risk. And there could be other voluntary contributions. Employer could be contributing to the employee's 401k plan or health insurance, something like that. These are various voluntary deductions. Could be on both sides. Now, the key to remember, these are collections for third parties. There are many different payroll liabilities, and they do not belong to the company. So if the company does not submit those in a timely manner as required with all the reporting, there's a lot of trouble that will be coming. Many payroll reports, the W-4, the W-2. W-4 is when you're initially hired, you're filling out a W-4 and claiming your exemptions, how much you want withheld based on the number of exemptions. Also, when you fill out the form, you have to tell them if you're filing single or married filing jointly. And the W-2, that is the end of year income reporting. Now, keep in mind that W-4, you have the right to change that at any time. Just ask your employer. Form 940, that is the annual federal unemployment tax return. FUTA is the federal, SUTA is the state. Form 941, that's the employer's federal tax return, reporting all the withholdings and the amount of money that is submitted. There was a time when you'd submit these forms with your payment, but now everything's done electronically. You electronically pay it, and then make sure you send in the appropriate forms in a timely manner. But for the accounting side, the payroll records, there will be a payroll register. It has the employee's identification, the pay type, how many hours, gross employee pay. It'll also give all the details of withholdings from the employee and a record of the take-home pay. There should be a separate payroll bank account. That's the best way to handle your accounting records. And a separate payroll check. There will also be something called the Employee Earnings Report, but for the accounting side. So this is all just terminology for you. For more details, take an payroll accounting class. For the financial part, you need to focus on what are your journal entries. For the employee side, salaries expense, think of that as what you've actually earned. Down at the bottom, accrued payroll payable, that's your net take-home pay. And everything else, those are all liabilities. They do not belong to the employer. The employer just collects them or withholds them from earnings and then must submit them. There are more journal entries for the employer's side. You have all the matching, payroll tax expense, so there will be certain journal entries for the employee side, certain journal entries for the employer's side. There will be many other deductions, contributions, collections from third parties, payroll liabilities, and again, it cannot be stressed enough, these funds do not belong to the company. They must be paid to the third parties in a timely manner, and state governments will come in and shut a company down, seize their assets if they are not paying those liabilities. They are liabilities, and that's very important to remember.